Welcome to the Consumer Action Financial Health and Technology webinar. My name is Audrey Perot. I'm the Director of Strategic Partnerships for Consumer Action. We'd like to thank our webinar sponsor, Wells Fargo. You are joining this webinar in listen-only mode. This webinar is being recorded. We will make the webinar recording and resources available next week. We will take questions at the very end of the webinar. If you have questions, please type your questions into the Q&A box. And there's a sample of the Q&A box. If we do not answer your question during the webinar, we will respond afterwards via email. Consumer Action does not provide product endorsements. The content presented is for educational purposes. A brief overview of today's agenda. We will have welcoming remarks by our sponsor, Lisa Price, Vice President of Financial Health and Philanthropy at Wells Fargo, followed by a presentation from Nelson Santiago, Community Outreach Manager of Consumer Action, on Consumer Action's consumer and financial education resources. I am pleased to announce that Alejandra Ruales, Manager of Programs at the Financial Health Network, is joining us today to talk about measuring financial health. I will return to talk about FinTech distribution models and Consumer Action's work. Then we will have a FinTech panel. The presenters for the FinTech panel are Laura D'Alessandro, Senior Program Officer, Family Income and Wealth Building at Local Initiative Support Corporation, Samir Goel, Co-Founder of Esusu, and Adam Rust, Director of Wise Wage Reinvestment Partners. I will return to talk about the mini grant program and facilitate the Q&A session. Thank you, Lisa.
Great. Thank you, Audrey, and thank you to Consumer Action for hosting the training today. I'm very excited to be here, and on behalf of Wells Fargo, thank you to all of the attendees for joining us as well. We appreciate your interest in financial health and learning more about financial technology tools. We're also very excited to support Consumer Action and their financial technology training. At Wells Fargo, we want to find and scale solutions that create pathways for people and communities, especially those who face persistent poverty. We want to help them to build wealth and inspire hope. And we know that your clients also face these unique challenges, and thousands of people don't have access to mainstream banking, safe and affordable accounts, credit cards, or a means to save. We believe that financial health trainings like this are part of that solution and will equip you with new, innovative ways to reach your clients. Our philanthropy at Wells Fargo is focused on 3 areas, all of which are highly interconnected and where we have significant business expertise as a financial services company. Those are housing affordability, small business growth, and financial health. And when we talk about financial health, we're not talking about traditional financial education or the ways of helping people learn how to save and to budget. We are taking on a broader approach to solving social issues and barriers that face communities and providing families with the tools and resources that they need to escape living paycheck to paycheck. So I'm excited for you to get to know more about financial technology tools, and we hope that you leave this training with the information and the resources you need to get started. Thank you.
Thank you, Lisa. Now we'll hear from Nelson Santiago, Community Outreach and Training Manager for Consumer Action.
Thank you, Audrey. Hello, everyone, and thank you again for joining the webinar today. I'm glad to be part of today's program. Before we move into our wonderful lineup of speakers today, we wanted to spend a little bit of time letting you know a little bit more about Consumer Action and about our resources for consumer and financial education. Consumer Action is a national nonprofit consumer education and advocacy group. Through our educational materials, community outreach, and advocacy work, we strive to empower underrepresented consumers nationwide to assert their rights in the marketplace and to financially prosper. Our educational materials include multilingual publications on a variety of topics that are typically available in English, Spanish, Chinese, Korean, and Vietnamese. We also put on train the trainers around the country for community organizations, as well as community workshops in areas where we have staff or where we may be traveling. We also operate a hotline that's been running since we were founded back in 1971, and it is an important tool for us in terms of educating consumers. Our advocacy department works to advance pro-consumer policy and legislation, and also works to help consumers be heard by elected officials. To familiarize everyone a little bit more with our publications and resources, you'll all be getting a copy of our sample publications handout that you see pictured here in the slide. And this handout lists some of the most popular and recent publications that we have created, and it includes links for downloading them as well as information on ordering them in bulk so that you can use them with clients. When you have a chance to look at the list of publications, you'll see that Consumer Action educates consumers on a broad range of topics that impact their pocketbook, including fundamental financial education topics such as credit, savings, and banking basics, but also topics like insurance education, including auto, homeowners, renters, and our latest module on health insurance was just finalized on our website. We have fact sheets on telecommunications and internet. This includes a fact sheet on finding low-cost internet, as well as fact sheets on using the internet safely. We have a micro-business fact sheet, as well as a job training schools, a module which helps consumers choose a job training school without ending up deep in debt and without falling for a vocational school scam. And speaking of scams, we have several publications related to this, including a module that talks about or covers almost every type of scam you can imagine, as well as our monthly newsletter, Scamgram, that comes out in the middle of each month and will probably be in your inbox in a few days or at least by next month. Also, we have newsletters, other newsletters, including our Consumer Action News, which includes in-depth reports and timely news on various consumer topics. But since today is all about financial technology, we want to spend just a little bit more time highlighting some of the key points in our FinTech fact sheet. We refer to it as a beginner's guide to personal finance apps. And the fact sheet starts by explaining some of the things that consumers can do with FinTech, depending on the FinTech app or tool that they're using. So for example, consumers can use FinTech to open, access, and manage accounts. They can use FinTech tools to create a budget, set financial goals, track spending. Also, FinTech apps can send reminders and alerts, maybe that a bill is due, that a balance is getting a little bit low, or that maybe spending in a particular category is getting higher than the consumer wanted. Consumers can also keep track of credit reports and scores using FinTech and can use FinTech to establish credit and build up their credit score. There are also several tools that help consumers save and invest. And these are just a few examples. There's much more, and we will send some resources for you to learn more about the kinds of things consumers can do with FinTech. The fact sheet also focuses a little bit on some of the advantages of using FinTech for those kinds of financial activities. So for example, the most obvious one is convenience. You can do all the things I was talking about from the palm of your hand on your smartphone. But also mentioned is accessibility. So if somebody is in a rural area or in an underserved area, or maybe they're homebound, with FinTech, they could still have access to their financial accounts. Another advantage that's mentioned is automation. We're all familiar with saving money every month. Well, you could set up a FinTech app to save money twice a week, depending on how you use your various accounts. You could actually automatically send money over to a savings or even investing on a regular basis. And finally, education is mentioned as one of the advantages, since many of these tools do have educational information to help consumers learn how to improve their finances. Now, there are a couple of tips too also on choosing and finding FinTech apps. And what the module mentions are some considerations that consumers will want to take into account. Is the FinTech app or tool compatible with the device that the consumer wants to use it with? Are the features what they're looking for? Maybe it's the latest and greatest budgeting app, but the consumer wants to work on building credit. Well, then that app's not going to work. Many apps are free. Some of them have costs, so that's something else to consider. And then also ratings and reviews. What are people saying? What are reviewers saying about particular apps? And then the last thing that the fact sheet talks about is using FinTech safely, and it provides a few tried and true recommendations, such as making sure that an app is legitimate before you download it so that you don't end up with malware, password protecting devices and accounts, and also not logging into financial accounts on public Wi-Fi. So that's a quick little look at the FinTech fact sheet. But how do you get the fact sheet and all the other publications I was talking about? You can download them on our website anytime. They're available for free. And you can also place orders, bulk orders for materials on our website. At the bottom, you can see you can use the drop-down quick menu or search by title using the search field to find the publication. Alternatively, you can fax in or mail in an order form, and to print those out, to download those, you can visit our website, click publications and how to order, and that'll take you to where you can download the various order forms for publication. And then a word or two here on orders and membership. FinTech fact sheet orders are free. Your agency does not have to be a member in order to order these in bulk. For other publications, they are free if you're an affiliate, if your agency is an affiliate network member. Otherwise, they will be $15 per order, up to 500 items. The annual membership fee is $75, and small business owners can also join as associate network members for the same fee. And the link for joining as a network member is here at the bottom of the page. You'll also get these slides in Dropbox, and we'll also find all this information on the sample publications handout. If you have any questions for us, you can reach our business line at the number that's on the screen. And if your consumers have questions for us or have complaints about any of the topics I just mentioned, we take calls at the number there and also accept complaints from our website. Thank you so much. I'll turn it back to Audrey and answer questions at the end.
Thank you, Nelson. Now we will have Alejandro Ruales to talk about measuring financial health.
Thank you so much, Audrey. And first of all, let me thank you and Consumer Action for inviting the Financial Health Network to participate in this webinar. Very exciting topic. I think that measuring financial health is extremely important for organizations to really be able to help their customers better serve them and understand if their products and services are actually helping them improve their financial lives. But before I get started, let me tell you a little bit about the Financial Health Network for those of you who don't know us. The Financial Health Network is the leading authority on financial health. We are a trusted resource for business leaders, policymakers, and innovators united in a mission to improve the financial health of customers, employees, and communities. We do our work through research, consulting, through different measurement tools. Audrey, you can go to the next slide if you'd like. And also through opportunities for cross-sector collaboration. We advance awareness and understanding and proven practices in support of improved financial health for all. We also lead a network of institutions who are committed to improving the financial health of the people that they touch. One of those network organizations is Consumer Action. We're very proud of having them in our network. Next slide. So just to intro, this idea of measuring financial health, I'm going to talk about two things. One is why it is important to measure, and two, talk to you a little bit about a tool that we have where you can easily measure the financial health of, again, customers, employees, or any stakeholders. But measuring financial health of your customers and employees can help you in multiple ways. One is to better understand your customers' financial needs and identify opportunities to help them lead financially healthy lives. This means that once you're able to provide a score, you're able to have a conversation with a client or perhaps give them some guidance on not only how one indicator of financial health looks like, but give them a holistic view on how they're doing. Then at that point, you're able to identify opportunities to improve one specific indicator and then ultimately improve their financial lives. The other one is to determine whether products, programs, or services are making a difference in the lives of those who you serve. measuring financial health. If you, for example, have a savings product and you want to evaluate if that savings product is actually having an impact on the financial health of your customers, you might measure financial health at that point and see if you see an increased level of financial health. Additionally, you can pursue partnerships and develop strategies to better meet the needs of your constituents. And finally, assess your company's efforts against national, regional, and local benchmarks. And these benchmarks you can get through our website, as I'll tell you a little bit later on. We provide those as a resource in our website. But just to backtrack a little bit, I think it's important to define what do we mean by financial health. This is we define financial health when your daily systems help you build resilience and pursue opportunities. So unlike narrow metrics like credit scores or abstract figures like National Savings Framework, financial health is a nuanced metric that assesses whether Americans are spending, saving, borrowing, and planning in a way that would lead them to be resilient and ultimately seize opportunities over time. So to actually operationalize this definition, we created the financial health framework that you currently see on screen. This framework is based on 8 indicators of financial health. And for every respondent, so for each of these 8 indicators corresponds to a survey question that is part of what we call the FinHealth score. Now, for every respondent who answers 8 survey questions that align with these 8 indicators, we can calculate a FinHealth score and one sub-score with the 4 subcomponents that you saw: save, spend, borrow, and plan. And this resource we call the FinHealth Score Toolkit. It is really designed to help companies measure financial health. It is very simple and easy to use, and it really provides you with a snapshot of your customer's financial life. You can use it to diagnose and track customer data, or to share financial health scores and actionable advice with your customers, clients, or employees. And I included the link there for you to get more information. It's finhealthnetwork.org/score. In that link, you can find the full toolkit that includes a survey guide with the 8 survey questions that are tied to indicators I mentioned before, the scoring logic, so you know how to actually calculate those scores, which I will go over in a little bit, and get the benchmarks. So if you want to compare the results of your customers against regional or national benchmarks, you could actually do that. Next slide, please. So to calculate the FinHealth scores is very, very easy. For every respondent who answers 8 survey questions, you get the 4 sub-scores that I mentioned and 1 FinHealth score. Now, the graphic that is on display shows you how to calculate FinHealth scores and the sub-scores. It's really a simple average of the response values to all 8 indicator questions. So to calculate, for example, the spend score, you would take the average of the 2 indicator questions corresponding to these components, which are going to be the survey questions 1 and 2. Those survey questions you can find in the toolkit, but if you remember that framework that I mentioned at the beginning, that's going to be spend less than income and paying bills on time. That's what would go into that first spend score. Next slide. So to interpret those scores, we have they go from 0 to 100. The way that we define them is those who score between 0 and 39 we consider financially vulnerable. That means that individuals who score in this section are struggling with most, if not all, indicators of financial health. Those that score between 40 to 79 are financially coping, meaning that they're struggling with some, but not necessarily all aspects of their financial health. And finally, those who are healthy, we define as those who have scores between 80 and 100. And these individuals who are spending, saving, borrowing, and planning, it means that the individuals in this category are doing it in ways that will allow them to be resilient and pursue opportunities over time. Now, we get a lot of questions about how did we develop this score, and I'll try not to get too much into the detail here, but just so you can get a sense that this was a robust and pretty lengthy process to get to a very simple to use metric that organizations could use. Our research team conducted extensive industry research to identify questions from existing surveys that corresponded with our 8 indicators of financial health. And based on this research, as well as multiple consultations with industry experts, we drafted an original survey guide that aligned with the 8 indicators of financial health. Later in 2016, our research team fielded a nationally representative benchmarking survey to test the draft survey instrument. And we analyzed different response patterns that where questions yielded high quality results and where questions could be clarified and improved. So basically, it helped us understand if we were asking the right questions and if actually respondents understood what we meant by these survey questions. Later on in 2017, we did hire an external research firm to conduct user tests and revise and do a revised draft of the survey guide and tested with a select group of low-income and financially struggling consumers. This firm conducted in-depth interviews with consumers in Detroit and San Francisco just to make sure that respondents would interpret each survey question appropriately. Later on, we did some additional statistical analysis and exploration, and in the first half of 2018, we had a survey guide at the beginning of the year, at the beginning of 2018, and after that, we conducted another round of cognitive testing with the University of Southern California's Understanding America Study Panel. So again, all of this is to say that although this was a lengthy process, and although you will see that this score is very simple to calculate, it went through rigorous testing, and it is a way that you can start implementing and start measuring the financial health of your customers, employees, or those who you serve. Next slide. And some of you may not be familiar with our Pulse research, so I did want to mention that the Financial Health Pulse is a groundbreaking research initiative that we have, and it is designed to track the financial health of Americans over time using a combination of nationally representative consumer surveys and transactional data. We plan to release ongoing data insights and benchmarks about Americans' financial health and how it's changing over time. And I'm mentioning this particular research because the 8 survey questions that are part of the FinHealth Score Toolkit are included in this national research. So if you're looking for additional insights or benchmarks, this is where you would get them from this national level research. Next slide, please. And we unfortunately won't have too much time to go too much into the findings of this research, but I would invite you to download the research report. 2019 was the second year where we released this research, and very high level, I wanted to share with you that we found that only 29% of Americans are financially healthy. So if you remember those definitions of healthy, coping, and vulnerable, we only found that 29% are healthy, 54% of Americans are financially coping, and 70% are financially vulnerable. And I am sharing this because this shows that millions of Americans are struggling financially despite an economy that has continued to grow over the past year. So this is important to keep in mind when we start thinking about benchmarks and how we're doing as a nation. And that's all I had really wanted to share with you in terms of measurement. But again, I do want to encourage you to at least take a look at the toolkit. That is a resource that it's an open source document. It's a very simple way for you to start measuring financial health. We have seen multiple applications, multiple organizations use it, either from starting a conversation with a customer. So let's say that if you are providing credit services or debt management services to a customer, you could start a conversation with them by asking those 8 questions, and then starting to understand, once you start measuring over time, how that score changes. It is a very powerful tool, not only for you to engage with your customer, but also to understand if you have any product that you're trying to test, if it's really helping your customers improve their financial health. So I'll stop there, but again, my contact information is there if you have any additional questions, and I'll be around through the chat box if you want to send additional questions. Thank you.
Thank you, Alejandra. Now I will talk to you about FinTech distribution models and consumer actions work. So I'm going to talk about 4 FinTech distribution models briefly, and then you'll have more details that come in the panel discussions that follow. There's the program integration model. That's where nonprofits distribute FinTech tools to consumers through their existing programs, such as coaching programs, counseling programs, and help consumers to enroll or sign up for the tools, develop content to educate the consumers about the tools, and track changes in financial health. An example of this is a nonprofit selects a tool through iOS App Store, Google Play, or online and distributes the tools to the consumer. This is the distribution model that Consumer Action used in both of its FinTech pilots. Then there's the co-design and delivery. That's where a FinTech and nonprofit collaborate to develop an integrated system. So example, a nonprofit and FinTech provider develop a customized version of a product for their consumers. And you'll hear more about this in the panel discussion later. Then there's the referral model. Either a FinTech is referring customers to a nonprofit to improve their financial health, and the nonprofit may provide counseling, credit counseling, housing counseling, or coaching, or a nonprofit may be referring to a FinTech, and they may be referring to a FinTech for a loan automation product, or maybe referring for a credit builder loan product or something of that nature. Then there's the system integration. That's where a nonprofit utilizes services from a FinTech provider to enhance back-end systems and operation processes, and that would be for rent reporting, loan servicing, financial coaching. So you'll hear more about that in the panel as well. A little bit about our approach. We work with financial coaches and counselors to distribute FinTech tools to LMI, LEP consumers, and other underrepresented consumers. We start by diagnosing financial health. We use the FinHealth score that Alejandra talked about earlier. Then we have the coaches to use the tools before they distribute them to the consumers. We operate from a premise that we don't want to do more harm to consumers, so we want the coaches to test the tools first, make sure that they know how to use them, make sure these are tools that can benefit their consumers, and anticipate any challenges or barriers that the consumers may have in using the tools. Then we distribute the tools to based on financial health needs of the consumers. And we require the coaches to provide clients with incentives. This helps to keep the consumers engaged. Then we distribute the FinTech fact sheet. This provides general information about how to use FinTech safely and what's possible with FinTech. Coaches might also distribute other consumer publications that help to build financial capability. Then we measure financial health at various intervals. The cadence tends to be 1 month, 3 month, and 5 month intervals. And we're checking to see how the consumers respond to the survey over time, and we're also checking to see if there's been other changes that are transactional that show improvements in the consumer's financial health. And so the coaches and the consumers collectively have an improvement in their financial health by using the tools together. Nelson talked earlier about benefits. I'll talk about a few risks, but we will send you a resource, the NCLC FinTech and Consumer Protection Guide, which talks in depth about benefits and risks. So one thing that is always said is that FinTech is more convenient. But if your consumer does not have technology at home, or they don't have a smart device with unlimited access, or they don't have a bank account or email account, FinTech may not necessarily be more convenient for them. The FinTech industry is an industry that is not heavily regulated as some of the other industries, such as banking and insurance. So the point we're trying to bring here is that we want coaches to be aware of potential benefits and risks so that they can provide their consumers with informed information about FinTech before they distribute the tools to the consumers. So Consumer Action in its first pilot used the FinTech tools listed above, Digit, SaverLife, Self-Lender. And we distribute the tools through 4 of our partners in California, Texas, New Jersey, and Washington, D.C. These nonprofit partners served LMI, LEP consumers who were either recent immigrants, financial coaching clients, VITA clients, or veteran clients. Each organization measured financial health and then offered one specific tool to interested consumers that met a specific financial health need. Our goal in conducting this pilot was to educate consumers about financial health and top technology, measure changes in financial health, and help consumers to build financial capability. So the outcome was that 42% of the consumers adopted use of technology, and the consumers saved an average of $468. Some consumers saved considerably more and some saved less. But over a 5-month period, the average was $468. In our second pilot, the consumers used the tools listed at the top, SaverLife, WiseWage, Every Dollar, and Tomorrow. The methodology was pretty much the same. The only thing that we changed between the first pilot and the second pilot was that, number 1, we required each agency to have an incentive plan. In the first pilot, we made it optional, but then we found that the agencies that offered incentives to the clients tended to be there tended to be a higher adoption rate. The other change that we had from the first pilot was that we provided the consumers the opportunity to try more than one tool. So instead of just using one tool per agency, they had the opportunity to use more than one tool. And we saw an increase in adoption rate. 50% of the consumers adopted use of technology. And we saw some incredible improvements in financial health. We had consumers that acquired new financial assets such as bank accounts, investment accounts, home loans, car loans. We saw improvements in debt-to-income ratio, increases in income, increases in savings, improvements in credit history. We saw consumers that had a thin file or were unscorable end up with a credit score after 5 months, and we saw improvements in credit scores anywhere from 30 to 70 points over a 5-month period. We also saw reductions in debt, and we saw consumers develop spending plans for the very first time using technology. Some of the key learnings that we had from this particular pilot were, number 1, that agencies need to do a full assessment of organizational readiness. Not all agencies are ready to implement a FinTech program. Also, organizations need to identify whether they have enough resources, whether they have enough staff, whether they have enough monetary resources to pay staff additional time to educate consumers and train consumers on how to use the devices. We find that collaboration is key. There's a lot of nonprofits working in the FinTech innovation space, and a lot are willing to share best practices. We also found that frontline staff must see value in the tools and must know how to use the tools. If the frontline staff do not see value, they will not share or convey the information to their consumers, the clients that they're serving. Frontline staff also need to know how to use the tools, because you might be working with consumers who do not have the technology skills necessary to use the tools. It's also important to remove barriers. There may be language barriers. You may need to translate surveys to different languages. You may need to find tools that are available in more than one language. You may need to adjust office hours or the standard operating procedures in order to eliminate barriers for your consumers. We find that it's important to diagnose financial health first and use a human-centered design approach, and then distribute tools based on individual needs, financial health needs that the consumers have self-identified. So I'm going to go ahead and turn it over to Laura from LISC.
Thanks, Audrey. Can you hear me?
Yes, I can. Thank you.
Great. Thank you. Thanks to Consumer Action for inviting me to speak, as well as to Wells Fargo for sponsoring this webinar and a lot of the wonderful work that we do. Next slide, please. I'm going to very briefly tell you about LISC and then talk a lot more about our approach to FinTech. LISC is a national nonprofit intermediary in CDFI, and what we do is we look to pool money nationally and bring it into communities around the country. Our work is with our local partners. Can you go to the next slide? And encompasses quite a few different strands, both in physical development by building affordable homes, as well as in the programs that we work on, like our early childhood development, sports and recreation safety, and then of course the program that I work on, which focuses on financial stability. Our goal is really to create communities that are communities of choice where people have opportunity and are able to thrive and raise families and work and really places of choice. Next slide, please. We do this all over. We do it all over the country. You can see where we've made investments in every state. We have 30 offices around the country, and we also have a large rural program as well. We're looking to expand more in these coming years, but our reach is really truly national. So where I work is in the family income and wealth building sphere, and that is where we have really been focused on FinTech. And that's because our national program, which is the Financial Opportunity Center program, next slide please, takes 3 core services: workforce development, financial coaching, access to income supports, and bundles them together and provides these services to the people who live in our communities. Our approach is to work with local, trusted, community-based organizations and to have it so that when clients come in through their doors, when they're looking for, say, a job, that these services are all provided together. Financial coaching, income supports, and workforce training. We're also trying to change some of the systems around these folks or in the neighborhoods that we're in, working with workforce development boards, cities, and employers to make sure that there are family-sustaining jobs available near the communities where we work. Our impact is pretty big. We are focusing on increasing the financial bottom line of those that we serve, helping people to build savings and pay down debt, as well as helping folks to build credit. And we really got into the financial health or financial technology sphere really because of this credit piece, because we knew that our folks weren't necessarily connected to traditional banking, and what's more, there weren't a lot of products out there when we started looking that were designed for the people that we serve. And so next slide. And if you were to get a sense of who our clients are, they're largely female. The average household income, just to clarify, is $9,000 a year prior to starting with us. And for those folks that come into us with a score, their average score at entry is 580. So we knew that we had a lot of work to do to to help people build credit, but in order to build credit, we needed to connect folks to safe and affordable products. And we actually, way back 10 years ago, created our first financial product that was not a FinTech product. And it was really a credit builder loan called Twin Accounts. Next slide, please. So we had our credit builder loan, which was Twin Accounts, and we were kind of watching FinTech happen. And at LISC, I think we're oftentimes late to the party, but we do tend to show up. It took us a long time to actually get there. We started to look at FinTech pretty early and just didn't see any products that were targeted to the client that I described. The products that were originally out there were for folks that were making $40,000 to $50,000 a year, and that just wasn't who we were serving. So we finally found a partner, Esusu. You're going to hear from Samir, and he'll tell you more about his products that really aligned with our North Star. We just had like this, we seem to have the same goals and wants. And so we started our partnership with Esusu in 2018, looking at a group savings product, and Samir will talk more about it. And we found that we were sort of successful with our group savings product, but we really liked the partnership. We thought that the product, it was working in some of our sites and maybe less so in other of our sites, but we thought that our partnership had a lot of value. And so we expanded and decided to look at ways to bring our Twin Accounts product, which was our credit builder loan, onto the Esusu platform. And that's what we're doing now. We've had some great success. I won't steal Samir's thunder, but we're really excited about how we started off. We found that it really was a useful switch for us to work with a FinTech provider in order to scale and reach more of our client base. And we're continuing to scale, and we're feeling really good about our scaling for this year. We did have some challenges, and I think this was going to echo everything that Audrey said, and it feels obvious now, but one, technology and using your smartphone's not for everybody. And of course, for those folks that don't think it's secure to be using their smartphone, it's an even harder sell. Especially because we work with financial coaches, and in order for us to even get this product out to the clients, we first have to get the coach on board. And so we have to sell first to our financial coaches and then to the clients. And so I think we found we knew that was something we had to do anyway for any innovations in our program, but we found that this was especially true for FinTech. And finally, one of the things that was really important for us is that we really found that the messaging of the product really mattered. And so we had always been selling our product, our Twin Accounts product, as a credit builder loan. And I think there's a lot of problems with calling something a credit builder loan. One, it just sounds like something that you have to explain, or you have to first say what the credit builder part is, and then what is the loan part, and it was very confusing and difficult. And Esusu really helped us to rethink how we position our product as a savings first product with a credit building component, which has really allowed us to take off. We're still doing the same thing. We're still sharing the same information, and we're still talking about building credit, but we're promoting our products with Esusu as a savings first product that also builds credit. That small switch has really made a big difference for us. As I would think about what to tell other nonprofits or intermediaries that are doing this work, I would say that waiting for the right partner is absolutely worth it. We talked to a bunch of different partners as we were on our FinTech journey, and we were really pleased when we first talked to Abby and Samir at Esusu. We finally absolutely connected with a partner, and it was pretty exciting. For us at LISC, I said we were late to the party. That's because we tend to take things as slowly until we know they work. And so for us, it was a slow approach to scale, really made sense. We currently have over 95 financial opportunity centers, and we're slowly scaling this product out so that we can learn how to best integrate the product and make sure that we are getting the broadest possible reach. And then we know that data, for us, data is everything. Being able to tell our story through data is very important. And we are, we've had to think about how we can track data between partners. And it's something that we're still, I would say, figuring out on the list side, trying to make sure that we're capturing the right data. And then finally, just a reminder, as we keep thinking about this product, the reason we are doing this is to impact our community. And the reason we are partnering with Esusu is so that we can bring a safe and affordable product to our clients. And we can do that with Esusu. And that really is the purpose behind what we're doing. And so we always try and keep that at the forefront, that this is meant to benefit the community that we serve. So that's pretty much it. I'll go ahead and turn it over to Samir at Esusu.
Thanks so much, Laura. Similarly, we are very grateful for our partnership with Lisk, one of my favorites, I will say. Hello, everyone. My name is Samir Goyal. I'm one of the co-founders of Esusu. Also wanted to take a moment to thank Consumer Action for having us on this panel. But as far as what we're going to cover today, just to give you an idea, we're going to start off with a quick introduction to Esusu, sharing our story and how we've progressed as a company, share a little bit about our products and how they're distributed, and then kind of do a deep dive with Lisk that'll really just elaborate a little bit on some of what Laura has already shared, and then highlight some of our key lessons and takeaways. If I could get the next slide, please. Thanks, Audrey. So, whenever we speak to an audience, we always find it important to share how we kind of ended up in this work and why it matters to us. And so for me personally, financial inclusion and, consumer advocacy are both things that are really, really personal. When my family moved to America, it was from New Delhi, India, and my mom was pregnant with me, which was great because, I got the citizenship lottery, but really challenging because we had to figure out how to make it work in America. And, in classic immigrant fashion, my father was mugged on his first day. We sort of started out with no money, no financial identity, and really nowhere to go. And so a lot of my early years, I really witnessed my parents struggling to figure out how to put it all together. And fortunately, they were able to, but the thought that really stuck with me is this shouldn't be that hard. And there needs to be better systems for enabling folks to get financial opportunities and access to wealth building and other such opportunities. And so, inspired by those experiences, once I had the time to, get an education and work in corporate America and build some skills, Abby, who has a, similar story in many ways, and I decided to come together to really take all that we've learned into building products and services that can empower the communities that we come from. And that's really why we started Esusu. But a little bit about the business itself. We've been kicking now for about 4 years. We started building this in January 2016, and now fortunately reach over 20 states, including some of the largest in the country. And we always point out that we've raised a couple $1 million in capital, and the real reason is just to provide, our partners and our end users with some confidence that we'll be around for some time and that we have the resources to really build, good quality products and invest in security. And then we have some great investors who really buy into the double bottom line of building a company that's growing, but also really putting impact at that core. And a couple to really call out are Acumen Fund, Global Good Fund, and Kleiner, all of whom are really aligned with our mandate as a company. So that's some background on us. I'm going to just jump right into the products that we offer. And so, this is the actual first product that we rolled out into the market. And Laura talked about it a little bit, but essentially it's predicated off the group savings, Raska, Tanda, Susu models that many of you may be familiar with, where people form groups of trusted family and friends, pool their money together, and take turns of drawing from this group pot, usually to make big ticket purchases, things like education, financial emergencies, that sort of thing. And so we took this kind of cumbersome manual process that's usually all cash and translated it into a mobile application to make it super seamless with greater security, and most importantly, to allow these sort of group pools to contribute towards building and establishing credit. And so we launched this product, originally as a direct-to-consumer business, but really quickly realized two things. One is that, building trust with consumers is really time-consuming and really expensive, and it was just not a winning value proposition for a newer company. But then two, that we weren't able to control for the outcomes that we were seeking in the same way, because what we'd find is a consumer might be able to download our app and save with their friends and family and build credit, but if they weren't aware of how to appropriately use a credit card, or weren't aware of other aspects of their financial life, they could be doing this positive behavior while at the same time not paying a credit card bill and then still being in some sort of financial peril. And so we actually shifted to a partnerships model where we work with large nonprofits or community-based organizations like LISC, and we really pair all of our products with a financial coach or a financial opportunity center. So that way we're really able to control for that holistic financial health and inclusion approach to supporting low to moderate income consumers. So thanks, Audrey, for switching the slide. Building on that, essentially once we started working with LISC, we learned a lot more about what their key needs were and kind of co-created individual savings platform predicated on their kind of proprietary twin account on our platform as well, where essentially, in addition to being able to save as a group, we offered individuals the opportunity to create a savings goal and then make monthly or otherwise installment-esque payments towards that savings goal, and then essentially build credit while doing it. And so this product was really a culmination of our learning that, while group savings might be familiar for immigrant communities, it also takes a lot of logistics, also takes a lot of trust, and that doesn't necessarily always exist in all communities. And if there's a way that we could do this on a more individual scale, we could reach many more consumers and get them started on the right journey much more quickly. And I think, we kind of also took some of the lessons learned that LISC had for doing this for a decade and implemented that in our product, really focusing on making the onboarding and offboarding processes super easy, reducing paperwork, reducing kind of friction in terms of like bank connections and all of those sort of things to make it a really easy and straightforward experience for the consumer. And then, going to the next slide, essentially the third product I'll touch on quickly is our rental reporting platform. And essentially what we do here is we partner with housing developers, often housing authorities or nonprofit developers, essentially integrate with whatever systems they use to capture rental payment data and report it into the credit bureaus to help tenants build and establish their credit score. And we pair that with a mobile application that lets tenants do three things: see their credit score for free, look at their rental payment history so that they're exactly aware of what data is being reported, and then three, connect them with other kind of service-based organizations that can help them in times of financial or other shocks. And so here we essentially really started thinking about this beyond savings and really thinking about how can we help communities that we're trying to serve build and establish that credit score. And the easiest and most scalable way that we found to do that was really through reporting rental payment data into the credit bureaus. And so that's why we kind of rolled out this line of work, and the impact figures that we've seen so far are outstanding. I think we are able to score people who do not have a credit score 100% of the time, somewhere between 620 and 670. And then for folks that have an established credit score, all things constant, the jump that we see is somewhere between 40 to 100 points. And so that's a really significant bump that we're able to do through this platform. And then, for the final slide of this section, really just want to reiterate that it's not just about providing technology, it's also about layering services on top of that. And one of the things that we find to be one of our core values is making our coaches' lives or our financial intermediaries' lives as easy as possible. And so that means that we provide them with all the materials, aka job aids and playbooks, to essentially make their job seamless. And that includes templated emails and other communications, a fully essentially resourced help center where they can find the answer to any questions they might have with visuals and text, great customer support, a suite of video introductions, and then also materials that are available in numerous languages because, we as a company aim to serve people that speak many different languages, and so do our clients. And so, by packaging all of this, we're not able to just provide technology, but also this service layer of additional value add. And so to deep dive here, Laura has already talked a little bit about the amazing work that we do with LISC, but I'll kind of touch a little bit more. We've been partnering with LISC now for almost 3 years, and we love working with them. I think LISC's approach to financial inclusion work is super sophisticated, really data-driven, and really puts the individual at the center of it, and we appreciate them as partners. What we've essentially been able to do from an impact standpoint is pretty significant. We work with LISC across 7 different markets. We've rolled out our group savings product in 5 of them, our twin account product or individual savings in 2 of them, and we'll be rolling out both of those products in all of the markets that we currently are operating in. And we've been able to see 3 kind of key impacts. The first is increasing the savings rates of clients. The second is improving their average credit scores. And then the third is just actually having them interface with their coach more frequently and kind of building that rapport and creating more touch points that a financial coach or practitioner may have wanted otherwise. And just to give you a snapshot in terms of a real case study, we rolled out our individual savings product with the LISC Chicago market around August 2019. And in the kind of final 4 months of the year, July 2019, and in the final 4 months of the year, we were able to enroll almost 100 clients in this service, and people were saving amounts from $300 to $2,000, which is not trivial at all. And for the most part, I'd say 99% people were consistently making their goals. They were communicating with their financial coaches about it regularly, and because we provide financial coaches with insights and analytics as to like how folks are doing, they were able to kind of keep with them throughout their journey, and really we're starting to see a lot of people get close to completing their savings goal, which is a really exciting outcome for us, and just an example, a small example actually, of the impact that we know we can have at scale with partners like LISC who are so forward thinking. And so going to the next slide, we do have some lessons learned, some key takeaways, some of which were learned the hard way. I think one of the things that we really stand behind, and it's contrary to some of the financial products in the market, is we're not looking to replace or disrupt financial coaches or practitioners. We firmly believe that financial inclusion technology needs to complement and amplify the work that these individuals are already doing. And the reason is that the communities that we serve, it needs to be a human-centered service model. And so when we take out the intermediary, it really actually ends up reducing the amount of control we have over driving positive outcomes. And so we're laser focused on how do we kind of work with the coach so that they can do the incredible work that they already do, but just touch more people and do it more seamlessly at scale. And so that's really our approach. How do we kind of put the coach at the center and amplify their reach? And that was a great takeaway for us. I think the other is that there's no one size fits all. It's really convenient to think that you can deploy one product with certain specifications and it'll solve everyone's problems. And that's just not realistic for the communities we serve. Everyone has their own story. Everyone has their own challenges. And so one of the things that we kind of integrate in our product is the ability to set your own goals and your own timelines. And so what that allows us to do is meet people where they're at. And so, you know, there might be some conventional logic saying that, oh, if people aren't saving at least $50 a month, that's not sufficient. And while that might be the end goal we're looking to get to, we really believe that if we can meet someone where they're at today, maybe get them saving $10, $15, $20 a month, doing this for 6 to 12 months, and then kind of upgrade them at their pace to saving $25 or $50 or $100 a month, that's really an effective way to drive change, and doing it in a way that kind of lets people go at the pace that's comfortable and meets them where they are today, not where we want them to be necessarily in the future. And so that's another big priority for us. I'd say the third is super straightforward. Anytime there's friction in a financial technology, you're going to lose a lot of potential users. And so we've been really thoughtful around how do we kind of reduce friction points, specifically during onboarding, because people don't have any gratification yet. You know, how do we kind of maybe incorporate behavioral science to make decision-making on the app really easy? Something I know Laura is also a big fan of. And so really just for us, we realized really quickly if there's like an issue with bank linkages or people have too many choices, people can put in any amount of saving goal, it would just create a lot of friction that would actually cause people to like leave the app, forget to come back, or otherwise kind of disengage with it. So that was a big one. And then finally, it's what's been reflected already, which is the consumer drives the product. We are really focused on building what people need, not what we think they need. And LISC is a great example of that. We learned from their experience as an organization, the FOCs they work with, and the end individuals that they work with, what was needed for this individual savings product that we kind of rolled out. And I think that kind of consumer-centered design is what's made it so successful. So I think that is all I have for today. Thank you again, Consumer Action, for having us, and Wells Fargo for sponsoring. I'll pass it over to Adam with WiseWage.
So great, thanks for having me on. Those were great comments, Samir, as well. I'm really thrilled to be here. Thanks for Audrey and Nelson for making this possible. And I also want to say that I see a lot of the attendees are people that I met at the most recent Consumer Action Conference. So that's really great to have you here again. So my name's Adam Rust. I'm the lead on WiseWage, but I work at Reinvestment Partners. And just by way of introduction about that, we're a nonprofit in Durham, North Carolina. We work on housing issues, foreclosure prevention, building affordable housing. We do some health work, and then we do advocacy. And we started doing WiseWage about 2 years ago, kind of driven by the thought that the policy work that I've been doing in payments, basic bank accounts, that this dovetailed nicely with all of those efforts. And so we went with that. This is an effort to kind of address the unbanked, which I think a lot of you are certainly familiar with. So if we go to the next slide. So we are working here with WiseWage. The effort here is to offer overdraft-free accounts. That's a strong belief that we hold, that overdraft is one of the things that drives people out of the banking system. And this seems like an opportunity to perhaps move up on that and give people a better choice. One of the things I'm going to talk about in this presentation is the idea that there's a tension between what makes the right product for somebody versus what is the fit that the bank would like people to have, right? So do people, can we teach people to bank differently, or is there some value in having them have access to products that fit how they are ready to work? So let's go to the next slide. This is a really great question. How do fintechs and nonprofits work together? And the comments that I've heard from others, I think I want to affirm all of those if they're consistent with my experience doing this. I think that if we want to get to success, what needs to happen for fintechs and nonprofits to work together? Our model is that we're a nonprofit working on a referral method to bring the right fintech products to consumers. When I think about how that works, the opportunities that nonprofits, they can have an opportunity to monetize some of the work they do. We all work in the common good, but often we need to keep the lights on too, right? So it's really good to have some means of earning some money for what we all do as nonprofits. The opportunity is also that nonprofits have a trusted relationship with their clients, and that work like this can create deliverables that nonprofits can then report back to their funders about, and possibly they can do this in a relatively low friction manner. I think the key challenge is that, and also people, Laura, you were mentioning this, is a question of trust, right? In our experience, we've worked with 9 different fintech partners, and several of them have gone out of business. Others have just completely changed their products to the point where it was no longer a suitable fit for what we were trying to offer. If you're a nonprofit working with clients, your relationship is a meaningful relationship. When you refer them to a fintech product that turns out to not be a fit, that's your own relationship that's at risk. So I think it's really key to sort of go into these relationships knowing that a solid partner is a meaningful difference when you pick someone to work with. So next slide. I think I just want to affirm what I was mentioning earlier. If you're familiar with Dan Ariely and the Common Sense Lab, you've possibly heard them discuss the idea that we spend a lot of time trying to educate people to think differently about how they manage their financial life. And that's important. But I think there's also room, and this is what they're saying strongly, to force the banks to kind of pivot and build products that are suitable for the needs of people, right? If we want to get to financial inclusion, right, an important question is, do we change people or do we change banks? And so to the next slide, I'm going to focus now for the next few slides on what we're trying to do, which is to work on the unbanked issue. When we look back at what the customer experience is with banks today, when we think about the pathway of their experience, many are convinced that the products are poor fit, and as a result, they do not return after they've left banking. And our analysis of this problem really is driven by the fact that it's the product. So people have a bad experience. They conclude that it's not a fit for them, and then it's very difficult to convince them otherwise. They hear, yes, that's a great product, but it's not a great product for me. That's what's in their mind. So the next slide, and this is a great bit of research that the Financial Health Network has put together year after year, is just to show how much people are spending when they don't go to banks, right? When they use alternative services. It's almost $3 billion a year for prepaid debit cards, almost $2 billion a year on check cashing. Consumers still have needs to transact. You really can't go outside of the electronic financial services system. You still need to have a way to pay your bills. It's just with our non-inclusive system, the poor are paying more to pay. So the next slide, what I'm trying to explain here is if the thesis of WiseWage is that it's things like overdraft, surprise fees, it's things like fees that inherently don't fit the way their financial life works, if it's that they don't have the credit score to get an account, well, those are only a few of the reasons, right? Those shaded areas are the ones that I think are truly addressed by WiseWage. But the ones that aren't shaded, right? Well, we just can't change some of the biggest problems. And I think the fundamental problem for a lot of people is that wages are too low, and often cash flows are uneven. And it's just very hard to live on the edge. And things like minimum balance fees and overdraft fees, they don't fit with that reality. So the next slide, this is really more of a landscape setting slide, but I mentioned that there's almost $3 billion a year in revenue on prepaid debit cards. Prepaid debit cards, both of the two top prepaid debit cards have over 4 million active accounts. So this is a huge market. It's a huge unmet market, truly. We talk about credit building, and what Esusu is offering is so much better than what some of the mainstream banks are offering when you look at these second chance checking accounts that do build credit. But they have overdraft fees, right? High overdraft fees, and they have high monthly fees. They're just fundamentally flawed in many ways. Okay, so in the next slide, I'm going to talk about our motivation, which is that we have been advocates for a long time. In this field, it's always important to think about your finances, and so we embarked on this project to create a sustainable way of maintaining our ability to have a presence in addressing the unbanked. I've written a lot of papers about overdraft fees. This was a way to do going to scale and move people out of bank accounts that had overdraft fees. And then maybe the last point, you're all familiar with this concept of social entrepreneurship. It's kind of the next new thing. We were able to get grant funding for this because this is something that foundations want to experiment with now. So that's just us being ready to pivot to where the opportunity is. So enter WiseWage. All right. Our belief is that the products could make a difference, right? The better bank accounts may be what it takes to get consumers over the threshold of getting into banking. What Samir said about friction is so true. We see strong fall off in terms of the process of people applying. I'll give you an example. One of our partners had an account that was really designed for Latino consumers, and it took ITINs. They discovered that in the process of applying, if they had 50,000 downloads, they had approximately 25,000 people start the application. Once it got to the point where they started asking for identifiable information, their addresses, their ITIN, it went down to 500 completed applications. And when it came to actually loading a direct deposit onto the account, it was less than 50 people. So the friction issue is huge, just undoubtedly. Our concept is that employers and nonprofits both have kind of the trusted relationship to possibly be the entity that pushes people into the banking system or back into the banking system. Employers want to pay by direct deposit. Nonprofits want to do the right thing, right? So each one of those potential partnerships is something that we have explored and continue to explore. The next slide, talking about the digital opportunity, right? It's my sense that we have had this momentum building towards smartphones for a long time, right? The payments field is changing. The consumer use of technology is changing. Even just 3 years ago compared to today is a dramatic shift, right? At the same time, think about what's happening in banking, traditional banking. There's been an exodus of branch banks, especially in rural areas. Banks are paying a lot of money to attract certain consumers. They're paying $400, $500, $600 to acquire a customer who is a higher dollar customer. The Google AdWord purchase price for get a banking account is about $20. The Google AdWord bid for cuenta bancaria is 20 cents. I think that kind of gets at how much of a difference the banks look at certain types of customer groups. Not coincidentally, they're pulling back on free checking. So the next slide, I always want to say this because I think the same perspective that consumers may have towards a bank account, is it okay for me, is it safe for me? The same perspective is inside anyone who's acting as a client, is serving clients, right? Are these accounts safe? And the first part of that is this concept of keeping my identity safe. The key point that I really want to make strongly is that at this point in time, the mobile banking experience is the safest of them all. Authentication is the process of authorizing a payment. It's not the process of signing up for an account and proving who you are. It's saying that I agree to a payment. If you think about how many times you do that when you have a smartphone, you've logged onto the smartphone, you've logged onto the account. Possibly there's even a text message coming back to affirm that you want to make that payment. Think about what the difference is between swiping, where no one ever asks if that's your card, or writing a check where your check number is your routing and account number are actually on the check, right? It's a very vulnerable payment situation. So this next slide, this really is a concrete way. This is Pew's data from earlier this year. You can see that almost any demographic, more than 80% of Americans have a smartphone now. And another percentage has a cell phone, right? This is significant, and it sort of speaks to the digital divide. The digital divide is more in broadband than it is in smartphone access. The next slide, I wanted to contextualize this. If we talk about branches, branch access is something that also is kind of dependent on your ability to physically transport yourself. The green bar here is the percentage of households who don't have a vehicle. And you can see in some groups, that's especially with African Americans, smartphone access is actually higher than vehicle access. So it's the same concept with branch banks in the next slide. I mentioned that, but I just want to present this data just to see how dramatically the change has been. So all of this goes back to the main point, which is that we need to fit the products right with the consumer behavior that we've observed. So slide 19, Wise Wage accounts, what do they have? There's no monthly fees, there's free ATMs, there's no minimum balance fees, there's no fees to buy anything, and emphatically there are no overdraft fees. We also have savings accounts on these, associated with these accounts that pay right now 1.3% and 1.9%, so that's dramatically better than a normal bank. The next slide, I'm getting towards the end now. We've worked at a number of ways of trying to find clients, either through businesses, through relationships with nonprofits. Thank you, Consumer Action, for being so helpful. And then we've tried things like Google. I can say that startups need Google, but Google has all the leverage. competing with banks for search terms is very expensive. It's really not possible to buy your way into customers with Google, at least at the referral prices that we're earning. Our next step is we're going to start partnering with low-income healthcare clinics in North Carolina. We have some clinics that want to address this issue as part of the holistic reach out to their clients, high degree of unbanked people in this population. So that's what I wanted to mention, and please reach out if you have any questions. I'd love to speak with everyone more about what Wise Wage is doing. Thanks.
Thank you, Adam. Now I'm going to talk briefly about the mini grant. The application deadline is February 24th. Groups need to apply online using the link. We will send the link out to you via Dropbox. Grantees will be announced on February 28th. The grant period will be from March through September 2020. Grant awards will be $7,500 to $15,000. Agencies must meet programmatic requirements. Agencies must have computer labs or technology on site for the clients to use. And agency staff must use tools alongside the consumers. Agencies must measure financial health using the FinHealth score. We will send out links on how to use the measurement. And agency staff must submit other reporting data to consumer action. Agency staff must participate in grantee calls. So we're going to send out a bunch of resources to you. I'm not going to go into depth on these resources, except to say the first 3 resources are about financial health measurement. So we'll send you 3 different examples of financial health measurement, as well as resources on how to explore nonprofit FinTech partnerships. The Cross-Sector Solutions Report is a report that was prepared by the Financial Health Network, which features consumer actions work as well as 8 other nonprofit FinTech partnerships. There's also Nonprofit FinTech Exchange convened by the Financial Health Network. If you want to know more about that and plug in or see what the exchange members are doing, we will send you information on how to plug in. And then there's some additional resources we mentioned at the beginning of the program, the FinTech and Consumer Protection, which will give you more information on risk and benefits of using FinTech, and the Protecting Assets and Child Custody in the Face of Deportation. We found that a number of immigrant consumers have concerns around using technology for fear of deportation. So this resource is a really good resource to have because it will tell you how to protect your consumers' assets and how to protect child custody. There are some financial coaching resources that we will send out. So if your staff need more training and want to be certified as a coach, there's some resources about becoming certified as a financial coach. Or the financial clinic has a tool that if you already have coaches on staff, it's a technology tool which can help in reporting your successes and outcomes. And the Cities for Financial Empowerment have different cities around the country that are offering free coaching services. So if you don't have the capacity to offer coaching at your agency, the Cities of Financial Empowerment cities offer free financial coaching to consumers in their cities. So if there are any questions, I'm going to open it up for questions. If not, I thank you for your time.